This program was brought to you by PennyMac TPO and Power Plus, their next-generation broker portal that gives you more speed and control over the process. You can now disclose, lock, and manage your loan seamlessly from start to finish, all in one place. It's another reason why greatness lives here.
Welcome to The Interest. I'm Sarah Wolak. Just like the leaves outside right now, mortgage applications continue to fall, reaching their lowest level in 25 years. As a result, the industry continues to shrink. Unfortunately, we have more layoffs today. This time, it's a Nevada-based real estate evaluation and technology firm cutting 27% of its workforce. A spokesman for Clear Capital confirmed the layoffs. The company cited the impact of a rising interest rate environment, which led to a decrease in customers. Aside from layoffs, there have been a record number of merger and acquisitions this year, too. But the most successful ones involve finding the right culture fit. Not every channel is popular at the moment, and it's a tough time to sell if you're not profitable. Our own Christine Stewart has more.
So what is it worth right now if you're not making money? The premium associated typically with a company not making any money is zero.
By the end of the year, there will be at least 50 mergers and acquisitions. There will be winners and losers.
Purchase has the most growth opportunity, and purchase historically is in retail.
Garth Graham, a senior partner at Stratmore Group, says there are exceptions, but retail is where it's at.
In 2021, 50% of all refinance transactions were done through consumer direct. However, last year, only 15% of purchase transactions were done through consumer direct. So suddenly, flip to 2022, market's 80% purchase, it's retail is where most of the transactions are done. So that's where most of the value is.
What about wholesale? A number of wholesale lenders have shuttered their doors recently.
There's not a lot of, people saying, gosh, I want to jump into wholesale. They probably want to wait it out.
If they bring something unique, like an expertise in a niche product like non-QM, construction renovation, manufactured homes, then there are buyers for those. Independent mortgage banks are also struggling these days.
The average mortgage banker is probably going to make zero in 2022. And frankly, that was after having a pretty good first quarter.
So what factors into a merger or acquisition?
The first factor is usually an entrepreneurial owner's stage of life, meaning they likely in 2020 and 21 made so much money that they've hit a personal net worth goal they may have established in their head.
And Graham says it's always easier to acquire than it is to start new with all the regulations and licensing requirements.
It's a daunting task, so acquisition is very compelling.
For the Mortgage News Network, I'm Christine Stewart.
Thanks, Christine. Coming up, would-be buyers are feeling locked into their current homes.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. According to Bankrate, the average rate for the 30-year is now north of 7%. And that's pushing the housing market into a standstill. Redfin and Zillow found that new listings plunged nearly 20% from August to September. Housing starts also continue to plummet, dropping just above 8%. Many would-be buyers are stepping out of the market as affordability remains an issue. Some are even backing out of deals, with 60,000 deals being called off in September, which represents 17% of all contracts. That's pushing down inventory, and not just because of a lack of customers. Nearly 3/4 of would-be buyers also own a home. So chances are if they're not in the market for a new one, they're probably not listing their current one. Unfortunately, we likely won't see relief for a while. Redfin predicts that rates won't cool until mid-2023 as inflation continues to run rampant. We'll be right back with what else is interesting today.
This program was brought to you by PennyMac TPO and Power Plus, their next-generation broker portal. Visit tpo.pennymac.com to sign up.
Welcome back. Here's what else is interesting today. There's one thing that's benefited from the rising CPI, inflation-protected bonds. But the return from I-bonds is likely to go down when the Treasury Department announces new rates next month. The Treasury looks at two things when it sets the I-bond rate every 6 months: the fixed rate, and the inflation rate. The inflation rate will be down from where it was 6 months ago, which means the I-bond rate is expected to fall more than 3 points to about 6.5%. That's still better than a savings account, so if you have a little extra cash, it might be a good time to buy. The deadline to get the current rate is October 28th. For more on these and all of today's top stories, go to mortgagenewsnetwork.com.